Hello and welcome to our channel, Top 10s You Should Know. Let's be real. Inflation is like a silent thief. You don't see it, you don't hear it, but every year, it quietly takes a little more from your pocket. Your savings lose value, your grocery bill grows, and what once felt like enough suddenly isn't. But the good news? There are smart, proven investments that don't just survive inflation, they beat it. In this video, we're diving into the top 15 investments that beat inflation so you can protect your money, your future, and your peace of mind. Let's get into it. 1. Stocks, the timeless growth engine. Over the long run, the stock market has outpaced inflation more consistently than almost any other asset. Think about it. When prices rise, companies often raise their own prices too, which means profits and stock values grow along with inflation. But here's the catch. Not every stock performs equally. The key is to invest in companies with pricing power, businesses that can raise prices without losing customers. Think of brands like Apple, Coca-Cola, or Procter& Gamble. Their products are part of daily life, so consumers buy them even when prices climb. Over decades, the average annual stock market return has hovered around 7 to 10%, comfortably beating inflation. 2. Real estate. The tangible wealth protector real estate is one of the oldest and most reliable inflation hedges. Why? Because when inflation rises, property values and rents usually follow. A home that costs $200,000 today could be worth double in 15 to 20 years. Not because it grew, but because the dollar weakened. The beauty of real estate is leverage. You can buy a large asset with a smaller down payment, and as inflation pushes prices higher, your debt stays fixed while your property value rises. That's how investors quietly build wealth. Plus, rental income often increases with the cost of living, meaning your property earns more every year. Whether it's residential housing, multifamily units, or REITs, real estate investment trusts, property has a built-in inflation defense. 3. Commodities, the raw powerhouses. When prices rise, so do the costs of raw materials. That's why commodities, like oil, wheat, metals, and energy, are natural inflation fighters. They're the foundation of every economy, and when inflation spikes, demand for these essentials stays strong. Investors can gain exposure through commodity ETFs or futures contracts without ever storing barrels of oil or piles of copper. But commodities can be volatile. They boom and bust quickly, so treat them as a small slice of a diversified portfolio. Think of them as your portfolio's armor, not the sword. 4. Gold, the historical hedge. For centuries, gold has been the world's emotional safety net. When paper money loses value, gold shines brighter. It's not just metal, it's trust made tangible. During inflationary periods, gold often retains or even increases in value because people turn to it as a store of wealth. However, gold doesn't produce income, no interest, no dividends. So it's best used as protection, not profit. Experts suggest allocating around 5 to 10% of your portfolio to gold or gold ETFs. Think of it as a golden insurance policy against chaos. 5. Treasury inflation protected securities. TIPS. TIPS are government bonds specifically designed to fight inflation. Their principal value adjusts automatically with the inflation rate, ensuring your purchasing power remains intact. If inflation rises by 5%, your TIPS investment's value does too. It's a safe, low-risk way to protect your money's real worth. Ideal for conservative investors or retirees. While returns are modest, the guaranteed protection they offer is unmatched. 6. Index funds. The set-it-and-forget-it weapon. Index funds are one of the smartest, simplest ways to grow your money faster than inflation. Instead of picking individual stocks, you own small pieces of hundreds of companies that represent the entire economy. Over time, economies expand, innovation grows, and index funds quietly ride that wave upward. The S&P 500, for instance, has historically delivered returns well above inflation. Plus, the fees are minimal, meaning more of your profit stays with you. The key is consistency. Invest monthly, no matter the market. Over years, even small contributions snowball into serious wealth. 7. Dividend stocks, income that grows with time. While inflation eats away at savings, dividend stocks fight back by paying you cash flow. These are companies that share profits regularly, and many have increased payouts every single year for decades. Think of firms like Johnson & Johnson, PepsiCo, or Procter & Gamble. The best part? Dividend income often grows faster than inflation itself. Reinvest those dividends, and you've got a compounding machine that not only maintains value, but multiplies it. Number 8, real estate investment trusts, REITs. Not everyone can buy buildings, but through REITs, you can own pieces of large scale properties like malls, data centers, or apartments without lifting a hammer. REITs distribute most of their income to investors, and since rents rise with inflation, payouts usually do too. They're liquid, easy to trade, and give you the benefits of real estate ownership without the headaches of maintenance. Perfect for those who want inflation-beating real estate returns with less effort. 9. Cryptocurrencies. The digital wildcard. Cryptocurrency is controversial, yes, but it's becoming a serious player in the anti-inflation game. Bitcoin, for instance, was designed with a fixed supply of 21 million coins, making it resistant to the endless money printing that fuels inflation. However, crypto markets are volatile and speculative, so they should never replace stable investments. But having a small exposure, maybe 1 to 5%, can serve as a hedge against fiat currency devaluation. In an age where inflation is digital too, digital defenses might just matter. 10. Fine art and collectibles. Art, rare watches, wine, and vintage cars may sound luxurious, but historically, their value often rises faster than inflation. Why? Scarcity. There's only one original Picasso or one Rolex Daytona from 1969. As inflation devalues cash, tangible, rare items become more sought after. These investments aren't for quick profit, but for long-term wealth preservation. They add diversity and beauty to your portfolio, a mix of money and meaning. 11. Farmland, the forgotten gold mine. Here's something few people realize. Farmland has beaten inflation for over a century. It produces both yield and value appreciation. As food prices rise, farmland owners benefit directly because their output, grains, crops, livestock, becomes more valuable. Plus, farmland is finite. We can print money, but we can't make more earth. You can invest directly or through platforms that offer fractional ownership. Either way, farmland is quiet wealth, humble, steady, and deeply inflation resistant. 12. Precious metals beyond gold, silver and platinum. While gold gets the spotlight, silver and platinum are powerful inflation fighters too. Silver, often called poor man's gold, moves similarly but has industrial uses, from electronics to solar panels, giving it real-world demand. Platinum, on the other hand, is rare and essential in automotive and tech industries. Holding a small portion of your wealth in these metals adds another protective layer. 13. Value stocks, investing in underpriced strength. When inflation rises, overhyped growth stocks often tumble. That's when value stocks shine, companies trading below their true worth. Think of them as the quiet, underappreciated workhorses of the economy. They often pay dividends, have strong cash flow, and don't rely on market hype. During inflationary periods, these steady performers provide balance and resilience. It's the patient investor's edge. 14. Inflation-linked bonds, global. Beyond the US, many countries offer inflation-protected bonds, like the UK's index-linked gilts or India's inflation bonds. These are government-issued securities that adjust with inflation in their respective economies. Holding a few of these can protect international investors from currency risk and domestic inflation spikes. It's global diversification at its smartest. 15. Yourself, the ultimate inflation-proof investment. Here's the most important one, and it doesn't trade on any exchange. The best investment that beats inflation is you. Your skills, your knowledge, your mindset. Inflation can devalue currency, but it can never devalue competence. The person who learns, adapts, and innovates always stays ahead of financial chaos. Whether it's taking a course, learning a new trade, or building an online business, self-growth pays the highest, tax-free compounding return. Because no matter what happens to the economy, your ability to create value will always be your greatest hedge. And there you have it, the top 15 investments that beat inflation. Remember, inflation is permanent, but so is your power to fight back. Protect your wealth, invest wisely, and most importantly, invest in yourself. Now tell us in the comments, which of these investments do you think is the smartest inflation fighter today? Let's talk about it below. And as always, don't forget to like, subscribe, and keep growing with Top 10s You Should Know.